Good afternoon, everybody. Welcome to the Trader Merlin channel. It is your, I don't even know what day we're on anymore. I believe we're on a Wednesday. I think it's a Wednesday now. Yes. Is it Wednesday? Yeah, it is Wednesday. I'm losing track of time here as we roll on faster and faster and faster through this beginning of the year. As the beginning of the year, typically I try to bring on a lot of different guests to give different perspectives about the markets. This is one that I've had on a couple times in the past. Not often enough because it makes for a great... symbiotic relationship, because I studied fundamentals when I was in college, and I really was told to look at the financials, break it all down, and really learn what a company does. And I just got to the point where it did not fit my personality. I don't know. I feel like I just can't trust the information. It didn't work for me. So I kind of shunned fundamentals and really went more towards the technical side. I'm a picture person. Show me a picture and I'll make a trade off of it. However, if you can combine that with fundamentals, I think it does put you in more of a power position of understanding where markets may go and how to act on those markets. So I'm always excited. I stumbled across this guy totally on accident. I don't know how it happened. It was the algorithm out there brought it to my attention. I saw some videos for The Investor Channel, which you can find on YouTube. I got it up here for you. Just go to @The Investor Channel on YouTube, and you get some just phenomenal commentary, analysis, and deep dives into fundamental. His new stuff on JP Morgan is pretty fantastic as well. I'm talking about none other than Mr. Colin Tedards of The Investor Channel. Welcome, Colin. Good to see you again.
Merlin, thanks for having me. And I have to admit, I stumbled upon you. And back then, I think it was just a podcast. Yep. And this was, I think it was before I was married and before I had kids. And so
and now your kids are in college.
I wish. That'd be not, well, maybe not, because I've seen the price of college these days. But I've been listening to you for a long time, so it's a pleasure to be here. Thanks for having me on.
Always a pleasure, and I'm looking forward to you filling in some blanks for me. But more importantly, for the audience here today, if you guys have questions you want to talk about specific companies, let us know. Obviously, between the two of us, we don't know everything about everything, but we know a lot about a little. So we'll try to do our best to cover the bases here. So I'll start while I give my audience a chance to get their questions rolling through, and I'm sure you probably have some people in the audience today as well. I'm going to start with kind of the big picture stuff. You recently came back from CES. First off, do you get sponsored to go to CES every year, or is that on your own?
I wish. No, I don't get sponsored, but I did get a media pass, so I don't necessarily have to pay to get in. But I paid for my hotel, and I paid for all my food and all my meals and things like that. Now I went relatively cheap in terms of where I was staying, the kind of meals I ate, so it wasn't a lavish trip. But man, it's so much fun. It's probably the one conference, and you probably know this, Merlin, you go to these conferences and you show up on the first day, you have every intention to be there and learn. Mm-hmm. And then after the first day, you're like, this sucks. I'm going to go, hang out in Las Vegas or wherever it is. CES is the one conference I go to where I wake up in the morning. I can't wait to get there. I go to bed early. I didn't drink. I didn't stay out late in Vegas. Wow. I literally, that's all I wanted to do was wake up and go check everything out. And it was a blast. I mean, there was a lot of stuff there. There was a lot of really fascinating stuff. There was a lot of technical fail as well. I mean, you see people trying to fool around with their robot or try to get something to work, or I was even in the Amazon booth and the screen froze. Now, some of it could be, conference internet and just the technology working in such a large environment like that. Yeah. But you see it up there and up close. It does make you appreciate probably like the Apples of the world, which come out with all these devices and they work relatively well, relatively flawlessly across hundreds of millions, a billion devices across the world. So it makes you appreciate the tech that works, mm-hmm. but you also get a view of the tech that's kind of coming.
Yeah, I think it's kind of the real of what tech is. And, the reason I bring that up is I loved your videos from there, by the way. I love that you live vicariously through you. And I found some of your commentary very interesting. In particular, and I'm in this camp. I'm of the belief system that robotics and AI are coming incredibly fast. And at some point here in the near future, humanoid droids are going to be replacing humanoid workers all over the place. Now, I got another friend who does another podcast, and he was like, he thinks 50% of the workforce is going to be replaced by the end of this year with robotics and robots everywhere. And I was like, whoa, 50%. Now, you showed a video of your analysis of kind of robotics there, and I would think that this is the creme de la creme. Like, if I'm going to CES like this, I need to really bring my A game. And it looked like you got a bunch of C+ to D, C- to D+ game with droids I could assemble from shit in my garage. What was the reality of robotics? Do you see it taking over as quickly as the end of this year?
Yeah, so on the humanoid robot side, doing something relatively useful, I would say the companies that are kind of out in front there. There's a private company that I think has investments from Bezos, has investments from a couple of, maybe Nvidia even, is a company called Figure. Now they are not there. Tesla has kind of shown off of their humanoid robot. They don't have a presence there. Certainly, if those companies were there, I think we could have seen maybe even the robots walking on the floor. But
Right.
what you saw at CES was more or less a prototype that was often tethered to like a laptop that then had an engineer that was kind of arranging this thing. And this thing, all it did was like move its arm this way.
Yeah.
And oftentimes, too, you would just see a hand. So there would just be a hand on, like, in a booth. The hand wasn't moving. There was some computer laptop that had something fancy up there, but it wasn't doing anything.
Yeah.
And so I would say from the humanoid robot doing something really, really useful, the end of this year, I think, is an aggressive timeline. I think what we are seeing, though, is on the software side in terms of AI. I know Mark Zuckerberg's made comments more recently. Mark Benioff, the CEO of Salesforce, they've made comments recently where they're like, we're not hiring any computer engineers. And in fact, we're laying them off because the ones that we have are doing so much better with the coding using OpenAI,
Right.
or ChatGPT or GitHub or whatever. And so they're able to replace that. And I think Mark Zuckerberg took it a step further, saying pretty soon we might not need a lot of engineers because the computer code is going to be able to write and fix the code in the future.
Right.
And so I think we're moving very quickly towards that, where software engineers out here in Silicon Valley, there's a need for far less of them. On the robotic side, humanoid robots doing stuff in like Amazon's warehouse, or maybe mass producing I know they're using robots a lot in car factories, but from a humanoid robot standpoint, maybe us as consumers buy one and they're picking up my laundry and putting it away, they're mowing my lawn, they're sweeping the floor, they're cleaning the countertops. I still think we're probably at least 12 months away from that even being a reality, let alone, me thinking, oh, should I spend $20,000 on this robot and bring it into my house? I still think we're a ways away, but there are some companies, I would say probably Tesla and Figure, at least from the ones that I've seen, that are close. They're close, but there's still a lot of challenges, I think, there.
Totally. Well, you just totally crushed my dreams. Thanks a lot, buddy. You just squashed it for me. I want the robot that does my laundry, does my dishes, I want it all done, and I need it by the end of the year, man. I just free up my time. And I'm glad you did those videos, because it really does put it into perspective. You look at the leaders. Of course, Tesla's Optimus bot looks fantastic, and I talk to people about this one, and you say year over year, that robot has done incredible things. It could barely stand and move. Now it's running and doing all kinds of tasks. Maybe in another year it'll be fully automated and allow us to do what we want. But yeah, I don't think we're going to see full 50% of the workforce displaced by the end of the year. Now, to take it one step further, you read through these company reports, you listen to the conference calls on earnings calls. One of the things that's concerned me, of course, I love NVIDIA. I think NVIDIA is one of the best companies out there. However, there was this gold rush type of surge from Microsoft and Google and all sorts of different companies trying to buy as many of these Blackwell chips or A100s, H100s, and of course created a big backlog of demand. You also started hearing from some of these CEOs on earnings calls of, we've invested so much, but we have no rate of return on that. We're not seeing anything out of it. Therefore, we might start to scale back our purchases of these components. As you scour through these financials, are you seeing that to be true, that companies like Google and Microsoft are scaling back that infrastructure purchase for AI and AI technology?
So the short answer is no. I would say I think what the CEOs, what some of them are saying on the software side, they're not seeing incremental purchases. So like a Microsoft Copilot, I think is an extra, maybe it's like $60 or $70 a seat in order. So if you have a big corporation, everybody has a Microsoft access, you're paying maybe $20 a seat. Microsoft wants to pay you another $60 to get access to Copilot. Also, when you look at Apple rolling this thing out on the phone, you're looking at other organizations creating software around artificial intelligence. I think what we're seeing is there's maybe not that big consumer and even business demand to pay up for this in large enough numbers to move the needle at a Microsoft that's worth 3 trillion, at a Google that's worth a similar amount, Amazon, these types of corporations. But where we are seeing it is on the efficiency side, where they don't need to have as large a headcount over at Meta and Microsoft and some of these companies running code, writing code. And so while they're not necessarily generating more and more revenue when it comes to AI at the current time, now I think we start looking 4 or 5 years out, there's certainly ways that they can monetize this slightly differently than how it is now. I mean, Google's results on search are not even, there's not really a lot of ad opportunities to run ads against the AI results. We obviously know in 4 or 5 years that'll completely change. But what they are seeing is huge amounts of efficiencies. Even when you back into like a JP Morgan, they are seeing opportunities to run their financial institution more and more efficiently using AI. And we're starting to see, yes, a year or two ago, it was just Microsoft using this stuff. It was just Google and Meta and these big kind of tech, like dorky tech companies that were doing this. But now we're starting to slowly see this kind of bleed into these financial institutions and on down the road. But initially, it's not going to generate extra revenue that was over and above expectations outside of the hardware makers.
Right.
So outside of NVIDIA, where their revenue is obviously skyrocketed because of AI and the demand there. I actually thought it was going to happen a little faster. I thought the software phase of AI was going to happen a little faster. And maybe I'm still overestimating it, but I still believe that day will come. But in the meantime, you are going to see continued investment here for 2 reasons, really. Number one is the companies can't afford to get left behind.
Right.
Because we've seen companies in the past, the IBMs, the Microsofts with mobile, BlackBerry. You don't invest in the future, Yahoo search engine. If you don't invest in the next big thing, whether it materializes or not, if you don't invest in it, you're going to likely get passed by. And the executives at these companies are obviously making huge amounts of money. They can't afford to get passed by AI because it could obviously hurt the company, but they'll probably be out of a job in just a couple of years and they'll be the disgrace of the tech industry. They don't want to have that happen. And then fundamentally, you look at the balance sheet of Amazon and Microsoft and Google, and they have more money than pretty much any government, let alone
90 billion for both sitting in cash. Yeah.
I mean, they got it. They're loaded. And so look, they can't go out and buy, Meta can't go out and buy Snapchat or TikTok. They're not going to let them do that. Same thing with Google. So what are they going to spend this money on? They're going to buy back the stock and they're going to, invest in AI. And that's what they've committed to last year, the year before, and certainly this year, the spending will accelerate. And so you should see continued acceleration. Now, will investors get frustrated that there's no payoff on the revenue side? Possibly. But again, that's really up to management to paint the picture of the revenues coming or, promise things in the future. And some executives obviously are better than others at that.
So, well, to your point earlier, and this is something we've talked about in this program quite a bit is, we'd all love to have that crystal ball that knows what the future holds. And part of what concerns me is, yes, you're going to see more and more robotics and AI. So we can kind of use those interchangeably. So fine, you mentioned, companies like Microsoft or Google having better efficiency from the code writing and Zuckerberg saying, okay, well, we don't need as many programmers and coders as we did before. Therefore, let's get rid of 20, 30, 50% of the workforce. That increases your bottom line. So all of a sudden, you'll still see increased profits with less employees, less overhead. So that should look good for these tech firms going forward. At a certain point, though, and this won't be for years, I don't believe, maybe a few years down the road, I think we're going to get to that point where it's like, well, what are these workers going to do, right? If you're a coder and you're now accessing a database on ChatGPT or OpenAI that's this incredible database of code that can write itself, my job's obsolete. And I used to have a premier job, or I'm a copywriter, or I'm a writer, period. Where do they all go? And ultimately, earnings will be great for these firms for a while. But if all of a sudden people start getting more and more unemployed, they won't be able to utilize these services, and all of a sudden it comes crashing down. I mean, this is the paranoid worst case scenario thing, but it's a very real reality that's going to be coming in 5 years, a decade down the road.
No, I mean, you said it well. This is a stark reality, and one thing that I do is I on Fridays I teach a finance course, kind of a basic finance course to seventh and eighth graders, and I go in
Oh,
there and I
wow.
tell them for real, it's like, hey guys, right now the AI can write a better essay than you.
Yep.
It knows more than you. It is more capable than you. As an employer, would I hire you or would I hire the AI? And 9 times out of 10, I'm probably hiring the AI. So you need to, you need to be thinking about this. This is a different reality than when I grew up. And when I was in seventh and eighth grade, the internet was coming, but it was kind of rife with opportunity. It was like, oh, we could set up a business. We could sell on eBay. We could, launch a startup. Now with AI, it's a little more, I would say there is a little uncertainty.
Yeah.
I'm not exactly, and I've got young children. So I'm not exactly sure their future when, again, right this second, the computer can write an essay on any subject with very little effort, and they can do it at a very high level. They can take standardized tests and pass most of them with more or less flying colors.
Right.
And obviously 4 or 5 years down the line, they'll get at least a little bit better, maybe incrementally better, maybe a lot better. And so what does the world look like when the computers have all this knowledge? That is a tough reality to think about. I think there are opportunities that we probably don't realize quite yet. And when those realities materialize, obviously sitting here as investors, we'll have to make those decisions. But I know for a fact, Jamie Dimon, speaking again of JP Morgan, Jamie Dimon is like, yeah, in the future, the kids are going to work 3 days a week and, they'll live a great life. They'll probably live to 105. I think Elon Musk has said very similar things like,
Yep.
you won't have to work if you don't want to. Now, what does that look from
Yeah.
a capitalistic society and competition, and how are kids brought up through the school system under those types of things? I don't know. I just know right now it reminds me a lot of when I was in seventh and eighth grade. The internet was kind of
Yep.
taking off, and they wouldn't allow you to use it. You had to go to the library, bust out the microfiche and cite the page number and all that stuff. Now the computer with the internet is right there in the classroom, and it is a main tool. By the time my son is in seventh and eighth grade, the AI will be sitting there at the table in school, and it'll be a main tool he uses. But again, what does the world look like at that point?
Yeah.
Does the efficiency gains, it takes a Stanford education or a 4-year degree to learn how to code. Well, with AI, we could teach these kids probably in third or fourth grade how to do it. And so what does the world look like under that scenario? Also, we don't necessarily have to focus so much on writing and structure and storytelling. Well, maybe we don't have to focus on that. We can focus on other things, curing diseases or whatever. I don't know. These are things I've thought a lot about. I definitely am not smart enough to come up with any type of definitive solutions, but I'm definitely thinking about them. I'm definitely trying to, run through the different scenarios that could happen. And I think it's actually going to happen sooner. The reality of that is it'll probably happen sooner rather than later.
Yeah, and it's not a fear-mongering thing. It's just an evolution. And Steve brings up an interesting point. He says technological advancements never lead to a decrease in jobs, just more advancement in different areas. Yeah, John O'Donnell, one of my colleagues, we interviewed somebody. I think it was Walter Block. It was some pretty big name economist, and he says, look, every time you get a major technological innovation, it's jobs are being lost, it's taking away the human worker, and then the markets just evolve and those jobs pop up elsewhere. So I like to think that as well, Steve. However, is this that different time? Is this one that's not the same? It's just I'm a little nervous because if AI can now be applied to robotics and the robot machines can flip burgers and do all the menial tasks, the low income jobs, then it can also do the high end jobs like programming, writing, developing. I mean, you look at Sora and some of these visual applications. I can make a movie with Sora. I don't need Hollywood. Yeah. I don't need all the studios and all. It's like, oh, wait a minute. What happens? So it's an exciting time to be alive. That's for sure. And I echo Big Eb's comment here. 7th and 8th graders, congrats. That's awesome for you to teach finance. Are you teaching your level of fundamental analysis of stocks?
Yes.
Oh my goodness.
So it's not dumbed down. It's some people are like, hey, do you teach them how to balance a checkbook? It's like, no, we're talking about economic policy. We're talking about interest rates. We're talking about inflation.
Wow, it's 7th and 8th grade, dude. You're killing me.
Yes,
that's awesome.
Right.
So good.
I try to treat them as if they're adults. And so we have a relationship where I am pushing. And one of the first lessons that I teach them is in life, you're going to have people that push you almost over the edge. And one of the best examples that I give is Kobe Bryant. Like everybody hated Kobe Bryant because he tried to push from Shaq to the organization to the coaching staff. They all hated him. But in hindsight, you look back and you're like, wow, that dude all he was doing was pushing me harder than I wanted to be pushed. And so I take that attitude whenever I'm in front of these kids is I could dumb it down and we could do the easy stuff. And but it's like, no, for first day of class, here's 15 balance sheets of these 15 public companies. Here's what you need to look for, write it on the piece of paper and figure it out, because the computer, the AI, and this is also coming to the lesson, the AI can do this.
Yes.
And so if you can't do what the AI does, all of a sudden now you're 3 steps behind. So it's just a matter of pushing these young people. And luckily for me, they're receptive to it. And they like it. And, it doesn't always come through, some students more than others, but I've had some go on. It's been many years. And so I've had some go through high school and then I run into them at the golf course or whatever. And they say, yeah, I went to Oregon State and I'm studying business because of you. Like I liked your class or whatever.
Well, you teach them stuff that's not normally taught. I mean, I remember my econ classes and it was nothing like that. I mean, it was like a yawn fest. And, this has been my big argument is we need to redo our education system here and stop teaching how to calculate a parabola and what the chemical formula for sugar is and say, here's how you live your life. Here's finance. Here's how money works, and man, and some of those kids, it's funny. I'm sure out of the 7th and 8th graders, some of them probably hate the class because it's just too much for them. And others are like, this is frigging awesome and end up leading into big careers for it. So when I taught at college, it was similar, but 7th and 8th grade, man, I'm envious.
Yeah, it's fun and props to the school. It is a private school, so I don't have to cut through any red tape.
Nice.
I don't have to worry about any of this stuff. And the parents are super receptive. I've got kids at the school. I've been at the school for a while, volunteering and doing different stuff. But now I have kids there, so most of the parents know who I am. It's not a large school, and so they're always like, "Yeah, push my kid. Push him over the edge." And they go home and tell them these types of stuff. So it's something fun that I do, but at the same time, it's also a skill. It's selfish for me because it's a skill building thing. I get in front of a room, I get to talk, if you can get 7th and 8th graders to be engaged in interest rate policy, you can get in front of a room with anybody and talk about whatever you want.
Confidence to the roof. So on this vein here, and again, if you guys have questions, let us know here. When you're looking at this innovation coming, AI, robotics, etc., I think more jobs are going to start to get displaced. People always point at trading and go, oh, well, trading's done. Trading's going to be wiped out by algorithms and computers. What's your take on that?
I don't think so. I still think, look, I think that would have happened already.
Right.
Like trading, especially trading just based on price movement, technicals, maybe a little bit of fundamental moved in. There's trading based on maybe news flow and those types of things. Look, if you look at the top 10 wealthiest people, even stretch it out to the top 25, 30 wealthiest people, none of them have a system like that. Yeah. And so no, I don't think. I actually think there's probably an even better opportunity when it comes to that, because I think it's still difficult. I've played enough around with these AI, like humans' ability to rationalize things is something that is hard to put into code. It's easy to rationalize certain things like written language and math and computer code, but rational things and human behavior is incredibly hard to model.
Yeah.
And I think we just see that with like election results or, different types of things, even events like, down in Southern California, there's those fires. It's hard. It would have been pretty hard to predict that or project that based on what has happened. And so there's always going to be opportunities. And in fact, that might become one of the bigger opportunities in the stock market is understanding that and the ability, and there's always that ability to take a risk there. As you're trading, you are taking a risk versus a reward. And, look, humans are very good at evaluating those risk rewards and kind of taking them.
Well, and I agree with you. I actually think that it's going to make trading even better as a more desired profession. I think it's actually bringing more people because if an AI system can go and write a script or make a movie or do my math equations or run my balance sheets or do my books for my company, that's one thing. But the financial markets are dynamic, and even if you get algorithms in there, which I see Matthew here is saying has been here for a long time. Yeah, algorithms have been here for a long time. And I relate it back to the day trading boom back in the late 90s when I got started, and everybody was like, day trading's going to ruin trading forever. It's never going to be the same. It just evolved a little bit, and I'd argue trading is way better today than it was back in the late 90s, and I think it's just going to get better and better. Prices will always move. The ability for an AI system to be on the opposite side of my trade every single time, 100% of the time, is impossible. If I buy something think it's going to go up, the AI is not going to force it down to make a profit. It's going to be using market conditions, and if we understand those market conditions, you have a competitive advantage. I think that it's actually probably going to be one of the best profession in a decade will be trading.
I agree. And I think the products have gotten better too.
Yeah.
There's all these like inverse ETFs and levered ETFs. And, obviously as a trader, you got to be comfortable and understand the risk profile that those carry. But man, 10 years ago, those existed a little bit, but now there's I think NVIDIA and Tesla and some of these high flying stocks, there's, leveraged 3X ETFs, both directions on those. That is, I wish I would put down the fundamentals sometimes, and occasionally I do it. Sometimes I spend a week just with the Schwab platform up, and you're just trading this stuff. That is exhilarating. Yeah. Now it's extremely difficult. It's not my forte, but there's so much better products these days to where you don't, just a small movement in the underlying asset could create a larger opportunity. And so, yes, maybe the algorithms and the gamification, all of it takes a little bit of the edge off. Wall Street's going to create a product that will just, amplify the risk reward. And if you're on the right side of that, obviously you can make a ton of money.
Yeah, absolutely. All right, I'm going to ask you about NVIDIA just because I know you study NVIDIA extensively. What's your take on NVIDIA? The last few months really done nothing but gone sideways. We got a lot of people here who are big fans for NVIDIA as well. What's your take?
Yeah, so NVIDIA, if you look out to Wall Street estimates into the third and fourth quarter this year, they are extremely wide for a multi-trillion-dollar company. Usually when you look forward on an Amazon or a Google or a Netflix or any of these companies, and you look forward 3 or 4 quarters, Wall Street's within a pretty tight range, maybe 5 to 10% at the most, where one analyst might be at $60 billion in revenue, one might be at $70 billion. If you look forward with NVIDIA, the spread is like 70 or 80 billion. I think there's the low end estimate a couple quarters is 30 billion. The high end estimate is for $100 billion in revenue in a single quarter. And we're talking about a company that, first of all, is worth $3 trillion. So the information that people are working off of is, people have wildly different opinions. Number two, we're talking about a company with 70% gross margin. So let's just assume or imagine NVIDIA comes to $100 billion in revenue in a quarter. We're talking $70 billion worth of a gross margin. That is almost unheard of. Okay. And so if they are able to come towards those high end estimates, we are looking at a company that is dramatically undervalued. Even if it comes just above the midpoint of those estimates, we are still looking at a stock, while it's not dramatically undervalued, will likely perform very, very well. The downside is, do they come towards that low end? And all of the information that we have up until this point is that would be, we're looking at an event in the market, whether it's a recession, whether it's war breaking out, whether it's a China invasion of Taiwan. Obviously, all of those things can interrupt commerce and interrupt NVIDIA's kind of move to $100 billion in quarterly revenue. But what we heard from Microsoft last week was, oh yeah, we're going to spend $80 billion on data centers in 2025. And guess what? In the first quarter, they only spent 16. So that means in the third and fourth quarter, this is a company that's going to probably spend north of $20 billion in a quarter. just on data centers. And they're going to probably do that for 2 or 3 quarters in a row at the very least. We haven't heard from Amazon. We'll hear from them probably in about 2 weeks. We haven't heard from Meta. We haven't heard from Oracle. We haven't heard from Google. All of these companies, if Microsoft's going to spend $80 billion, right, well, you know, Amazon's
keep up with the Joneses.
Yeah, they're going to spend at least that amount. Now, some of the money is going to go to Broadcom. A little bit of the money will go to AMD. It's not all going to go to NVIDIA GPUs. But my understanding is the Blackwell is having some minor rollout issues. It was we were supposed to have more supply onto the market at the current time. That is not happening. So you're probably going to have a muted first quarter, probably even a somewhat subdued second quarter. But if everything remains on track, the third and fourth quarter will be when Wall Street kind of catches up and they realize, oh shit, this company is probably going to do 80 billion dollars in revenue in a single quarter if they can pump out and manufacture enough of these things. Again, that is all the wild card. Can Taiwan Semiconductor make enough of these and push them into the marketplace? Because the demand is exceeding the supply by we're talking a wide margin. If NVIDIA could deliver $100 billion of GPUs right now, there are 4 companies that would buy all of them just on their own, let alone across all 4. So NVIDIA, in my opinion, remains a hold. If you want to accumulate more shares, there's absolutely nothing wrong with that. You're under the assumption that the back half of the year comes in way hotter. And certainly there are professionals on Wall Street that have access to very, very good information, including the executives themselves, that believe you could have $100 billion quarter. Now, at the same time, you have some analysts that believe a $30 billion quarter, but I got to imagine these people are, I don't know what they're doing at their desk to make that prediction other than, yeah, we could have a recession. There could be some really bad stuff, but at that point, every stock you own is probably taking a dump, let alone NVIDIA.
Yeah. I was always, I was giving a presentation in Ontario or someplace, Southern California, and someone in the audience says, what's your idea of a black swan event? And I said, obviously we don't know what a black swan event is until it finally is there. And nobody on the panel was speaking, giving what their idea was. And I said, look, I got one for you. And that is Taiwan. I'll get your intake here in a second, or your take on this in a second, but you have a president currently who is being very, hey, you know what, we got to put, sanctions on chips. You can't send chips here. You can't send those chips there. Of course, it's the last few days of the Biden administration, so we'll see if that gets lifted as soon as Trump takes office. But, you're playing tit for tat with China because obviously Taiwan Semiconductor is a Chinese company. I'm sorry, it's a Taiwanese company, but China says Taiwan is there, so we'll call it a Chinese company. And we have warships circling around Taiwan. China has warships circling around Taiwan. Any heated discussion where finally China has enough and goes, you know what? Screw you guys. You said you're not going to send your NVIDIA chips over to us. We're not going to send the TSM chips to you. And all of a sudden, NVIDIA could fall massively. Now, that's a total black swan event. I don't think it's going to happen. It's too much economic damage, but those are the types of things I think maybe these analysts are looking at is increased tension with U.S. and China, Taiwan getting heated up. And if TSM goes offline, and I'll show you the chart of TSM for all the viewers out at home, this has been a phenomenal chart. I mean, from the lows in 2022, Taiwan Semiconductor is up about 249%, and that is about as beautiful as an uptrend as you're going to get, and it doesn't look like it's slowing down. So they're certainly servicing the world, but any hiccup there will be dramatic ripple effects throughout not just the U.S. markets, but anyone who's buying TSM core components for their products.
Absolutely. And one thing, we recommended Taiwan Semiconductor at the newsletter I was working at, maybe it was 2 years ago. And the pushback I got at the time was, well, what happens if China invades Taiwan or whatever you want to call it? And the way I always explain this is like, look, if that happens, your entire portfolio is going to take a dump unless it's Lockheed Martin, Smith & Wesson, and, maybe Philip Morris or something, So do you want to hedge your portfolio for that type of like destruction? It's almost like a 9/11 type event, right? That there's just certain risks that you have to take as an investor. That is just inherent in investing. And look, if Taiwan gets invaded and it's bad enough, they might not even trade stocks for a couple of weeks. Yeah. Like it's literally that like cataclysmic type of event.
Totally.
And so do I want to sit here and actually hedge against that? Or like you said, you brought up the chart of TSM, it's up to 200. Do you want to make 200%? And then, understand that that's not only a TSM risk, but that is now we're looking at market risk,
global,
global stability risk. Forget the stock market. I think it's one of those risks where if that happens, I am not pulling up my E-Trade account, worried about my stock portfolio. I'm worried about my children. I'm worried about if I have food in the pantry. I'm worried if I have water. It's like one of those events. Very similar to COVID. COVID happens. We don't know what's going to happen. Obviously, in hindsight, now we do. But early March, I was wondering, do I have enough food? Can I protect my family here? Do I have some cash just in case the banks get shut down? Like those were the things that were going through my mind.
Right.
And that's what would go through our minds if there was an invasion takeover. We would be, sweating bullets and not necessarily worried about our portfolios. Now there'd be great opportunities. God, there'd be great trading opportunities on this. But do you want as an investor to be concerned about that type of risk? I believe, and I could be wrong with this, but it's really my opinion as an investor. There's only so many things you can care about. And when we're talking about global risk, if you're worried about it, there's a mattress and you can put your money under it. That's, if you're not willing to take risk, then maybe you shouldn't be in the markets.
Right.
But if you're willing to take the risk, then there's just some risks that you just can't hedge for.
Right. I was going to say, when you look at that landscape of NVIDIA, one of the things that they have is just such a dominance in the GPUs, right? No one even comes close to it. Are you seeing that gap start to close? Is there any, I know you're an AMD fan. Is there somebody that's kind of saying, listen, we got to join this party because it's a one-trick pony and there's a ton of money there? Is anybody really quickly rushing to that?
Yes. So where we're seeing it is actually on it's called like custom ASICs, or I think there's a couple of industry terms for it, but it's basically Broadcom. So for several years now, many years, Google has actually been making what is considered maybe like a custom GPU, and they've been running those in their data centers. It serves up maps, it serves up the search engine, it serves up YouTube. It runs a lot of the backend services when we're using Google products. And so what other companies have seen is the success that Google has. They can custom make these things to work in a certain way for YouTube, certain way for search, a certain way for maps, a certain way, however Google wants to use it. And it also trims 70% gross margins probably down to 20 or 30%. And so Broadcom a couple of weeks ago, maybe it was a month ago at this point, had an earnings call where they said, yeah, in 2 or 3 years, we're going to do like 60 or $80 billion just in a single year of these custom GPUs. And I think right now Broadcom's doing maybe 17 or 18 billion. So we're talking about a massive increase over at Broadcom. So they're very quickly, I would say we'll call everything a GPU just to keep the terminology the same, but NVIDIA is number one by far. They are by far the Michael Jordan of the GPU business. And there's really nobody close, but very, very much coming up the ranks is Broadcom, and they're partnering with the Googles, the Amazons, the Metas, and the Microsofts to make these custom ones. And on top of that, Broadcom also has a networking solution. So even if you use NVIDIA's product, even if you use AMD's products, you could pair that with some of Broadcom's technology as well. Not only that, Broadcom has a software business that was just bolstered up with a VMware acquisition, and it's wildly profitable. And so this is the company that, if you own NVIDIA and you don't own Broadcom, in my opinion, it's a great pair because you are going to capture, I would say, just estimate 70 or 80% of the growth in terms of GPU sales over the next 4 or 5 years. Now, AMD will play a little part of that, but they have a more diversified business into personal computers and PlayStations and Xboxes. And Intel is like, the stepchild that can't get its act together. But I'm sure many of your viewers can look at the chart, and there's, it's ugly. Interesting. It's ugly, but sometimes ugly can turn into, could turn into gold. It's only an $80 billion company. And if they get the right leadership over there, they can turn things around. But their product is not even close in a lot of ways to what's happening at AMD on the CPU side, and nobody's in the same category as NVIDIA outside of Broadcom. So if I would just say, if somebody wanted an alternative to NVIDIA, Broadcom, hands down, 7 days a week.
All right. Well, I've been showing you that AVGO is a ticker symbol for Broadcom, for those who don't know. And keeping kind of apples to apples here, 449% gain from those October 22 lows on Broadcom. So yeah, certainly money pouring into that one. All right, I'll switch here and then we'll kind of start to wrap up. Cryptocurrency and digital assets is one that I love because I see the infrastructure changing for our markets going forward. I see the payment rails. I see financial institutions using blockchain technology. However, as someone who looks at fundamentals and looks at these metrics that are, baked in generally accepted accounting principles, crypto's got to be a really difficult one for you to latch on and say, I get the fundamentals. What's your take on crypto? Do you like it? Are you anti?
No, I'm definitely not anti-crypto. I think it's the people that are anti-crypto don't understand that. I think just broadly you can categorize it as, some people will say, well, blockchain's useful, but crypto's not. But it's like, the crypto is the reward token to operate the blockchain.
Right.
So they go hand in hand. You need both. In a decentralized one, a centralized blockchain, I guess you could run without a reward token. But for a decentralized, there needs to be a reward to be running the decentralized servers, running the chain. No, I think, if somebody wants to buy into crypto, I certainly have bought it and sold it over the years. I tend to view it more technically because, like you said, it's hard to make maybe broad fundamental analysis around it. But I think there are arguments that can be made around the United States dollar, global sovereign debt levels, all those types of things, reserve currency. There are fundamentals, and I can certainly believe them, and in some ways probably buy into them. I tend, when Bitcoin pulls to a level, I'll pull up the chart, and if it looks good, I'll add to a small position that I have. I think it's a very interesting asset class, and I think it's one that is here to stay. And even the little meme coins that go up and down, those are bringing attention and bringing people into the market that will be future stock traders, future stock buyers that are getting them interested in finance in a different way. And so I have no problem with it. Now, will I be sitting here and be buying Dogecoin and watch it go up and down? Probably not. But I think it's a great segment of the market. And if you want to over allocate to it, I think the performance speaks for itself. And so if you allocate, a vast majority of your resources to that, I wouldn't, persuade nobody against that. And if you're on the forums and the Reddit and you're on the Discords and you're in here digging this stuff out, there is money to be made. I tell you what, Merlin, I'm on Twitter sometimes and I see people pumping a certain one and I'll just go buy it because I'm like, well, there's clearly a coordinated pump around. I can't remember. It was like Litecoin and there was a couple other ones, XRP or one of these. And it's funny. I'll buy it and then I'll know like, oh, it got pumped because my wife will ask me about it. Or I've got a buddy.
Time to sell.
It's like my buddy that's like a construction worker be like, hey, you know anything about XRP? It's like, yeah, hold on. Let me go sell it really quick. And then, I'll tell you about it. So it's like, these things get pumped and I've never bought anything that I didn't want to sell. And so I'm comfortable buying this stuff and selling it. But in terms of like buy and hold, Bitcoins, in my opinion, if you want to just buy and hold one of them and just forget about it, Bitcoin would be the one that I would recommend. But you're going to know more about this than me, Merlin.
No, it's okay. So I do a thing every year where it used to be just on the S&P where we would forecast what we think the target for the S&P is going to, SPX would be by the end of the year, but I've doubled it up, and winner gets a prize at the end of the year. So we'll do both here if you want to. All
right.
So it's now, where do you see Bitcoin closing at the end of this year? What price?
Okay.
I'll put you on my list.
So I think right now it's at 100.
Yeah, roughly.
Right around there.
99.70.
Alert. Yeah, so I got an alert on my phone, and it's at 100,000. And I think we are going to have some volatility in it. And so I'll kind of take this a step further. I would imagine we'll probably have a 25, 30% drawdown, take us back into the 70s on it. But I think you finish the year probably 30% higher. So I could see this hitting 125, 130 by the close of the year. The momentum, and obviously, as we know with Bitcoin, there's a fixed number of them, and that's just a powerful thing when there's a finite number of these things. And it just seems the demand every year gets incrementally higher, and that's obviously good for its asset price.
So you said 125 to 130. I split the difference, gave you 127.50. That'd be an increase of 35.99% for the year. Not too shabby. And then S&P, we've got some pretty interesting things happening this year. Obviously, a change of administration from the executive and legislative and executive. Judicial going to stay the same for a little while. But where do you see the SPX closing this year?
Yeah, so I'm thinking the way I think about this is through corporate revenue and earnings growth over this next year. I think we've been on the back half of 3 or 4 years where it's been very strong, not necessarily from the revenue standpoint, but a lot of these companies like Google and Meta and the large ones that I follow, they squeezed a ton of efficiencies into the business. And so they laid off a bunch of workers, they got rid of office space, they leaned down the operations. And while revenue growth, certainly if you look at like Apple and maybe even like Google to a certain degree, revenue growth is not blowing the doors off, but boy, their profits have skyrocketed and their cash flows have skyrocketed. I think this year it's going to be a little more difficult to figure out ways to continue to lay off tens of thousands of people and to cut cost and to drive higher profits. So long-winded answer, I think we have a relatively muted year. I want to say off the top of my head, the S&P did 26% last year.
Yep,
Maybe 20, I'm wrong.
Yeah, it was 24.
24. I would say we are going to be a number probably about half of that. I would say probably a 12% return. And very similar to crypto, I think you have some ups and downs related to the new administration. Trump in general is bringing a lot of optimism. I'm reading through conference calls. You're seeing it from executives. You're seeing it flow through into the consumer. But he gets, he's talking about Greenland and Canada and like none of this stuff that he even ran on. And so I think he'll create some waves in the market, which is great from a trading perspective. Like if you love trading, Trump is like the perfect guy because, he might talk about Canada and, China, be tough on China one week and then slap 50% tariffs on Mexico. And boy, that is a music to my ears as a trader because there's going to be all this wild stuff happening. And so I think you're going to have some gyrations. In totality, it'll be a decent year just to be kind of index weighted. I think 12% seems reasonable.
I put you down for exactly 12% on there. That would put the S&P at 65.88 for the end of the year. And for those of you who are new, maybe you've been following Colin and kind of here for the first time, thank you for joining us today. Also, if you want to put your forecast in, feel free to do so. I know Matthew's been pretty active in here, so good to have you, Matthew. If you want to give me your forecast for the S&P and for Bitcoin for the end of the year, type it in the chat and I'll put it on the list. And then you'll want to pay attention to the last show of the year or the first one of January, depending on when I get this, and then I'll make the announcement and get some prizes out there. So there you go. Nice. Tell me about a little bit what you're doing. You've always been kind of bouncing around. I know you've got Equity Empire. You've got a newsletter there as well. Do you want me to promote that one? What would you like me to?
Oh, yeah. I mean,
I'll put it in the chat right now because I subscribe to it as well. But here you guys go. This is the chat to Equity Empire newsletter, which you can subscribe to for free there. And what else?
Yeah, I mean, everything's free right now. We're going to launch a paid service. What I'm going to head up is something called Blue Chip Stock Investor, where I'm basically going to be like your analyst. And I'm going to cover probably about 70 stocks in total, mostly large cap stocks, ranging from the technology stocks to healthcare to banking. And I'll be covering every event and every news making, certainly earnings as well, and keep you up to speed on those types of things, and also alert you when they pull into. I use technicals in terms of how I buy. And so I use fundamentals to decide if the company is worth buying. But the way I make my decisions, I make it easier on myself, is I just wait for the chart to tell me when to buy. And we'll be passing that information on to viewers. Now, we don't have that fully launched yet, but we've got a great team behind me. I've got an ex-hedge fund manager. He actually teaches at OTA as well. So I've got a great team behind me. We're going to have a lot of fun stuff. If you don't feel like, paying or anything like that, we're going to have a ton of free content. And certainly if you ever want to reach out You reach me on these social feeds. You can reach me any number of different ways. And, I'd be more than willing to help out the best I can.
So I've got a few things over here for the viewers. This is his X, which is Investor Videos, at Investor Videos, which I've had on his name underneath it. So if you go to social media, look for at Investor Videos. And if you're looking at YouTube, it's the Investor Channel, at the Investor Channel. Let's see if I can actually just copy that one over here as well. He puts out some phenomenal content, and I'm lazy when it comes to doing fundamentals, but I'll tell you, especially with things like JP Morgan. I'm a big fan of JP Morgan. It's funny because for different reasons. First off, I think they're too big to fail. That's one thing. Number two, I think that Jerome Powell is literally sleeping with Jamie Dimon. I think that they're having a romantic relationship. It seems like every time the Fed has issues, Jamie Dimon just gets invited to these private meetings, so he's connected up on the high hill.
Yeah.
Then I look at cutting edge technology and the future things. I think that AI and digital assets are a major factor. People point their finger at Jamie Dimon because he's just slamming crypto all the time, every chance he gets. You realize, you probably know this, but they have their own blockchain. It's using Avalanche and Ethereum. It's called Connexus, right? I mean, these guys are already using that technology. Yeah, I'm definitely a big fan. But your analysis on JP Morgan was awesome the other day. I really enjoyed that. It was today, wasn't it?
Yes, today. Yeah, I'm going to do Wells Fargo here pretty soon. I'm going to go through BlackRock. I've been going through these all morning, and I just love to read the conference call. Sounds like Jamie Dimon's got, or at least he wants to only have maybe 3 or 4 more years left at the bank. And so, but boy, the performance of JP Morgan over the past year, I think the things up 45-50%.
Yeah.
So, they benefited huge. And look, out of all the major money center banks, that one is run extraordinarily well. And, they obviously generate a huge amount of profits over there. And, look, he's a great operator. And as long as he's at the helm of that bank, they're probably going to be doing well because, like you said, he's basically, running the entire financial institutions in the United States.
Yeah. Jamie Dimon, man, it's a good model. Let's see. I borrow money from the American consumers and I pay them 0.01% interest. And then I can lend it out for 30-year fixed rate mortgages at 7.5%. Like, this is a win-win here. That's just one aspect of what they do. But yeah, great model out there. So, all right. Well, Colin, thank you very much for coming on. I do appreciate it. I know you took some time out of your busy schedule. Sorry it's been so long. I don't know why I haven't had you back on here more recently, but I like all your endeavors. Look forward to seeing more of that, and maybe I can help you along the way and get you back on here with some regularity.
I'd love it, Merlin. Thank you. And again, I've been a huge fan of yours for longer than, we both date ourselves. If I told you how long, I put the podcast on, I go hit some golf balls. I got your podcast on. John O'Donnell is another guy. I love hearing him. He's so great. And so, yeah, I appreciate all your work and a huge fan. And you've taught me a lot, so I appreciate it.
You as well. Maybe one of these days I'll make it up to your neck of the woods. We'll go golfing. I'm gonna head up there and go snowboarding at Tahoe here soon. So maybe I'll swing by on the way out.
There we go. Nice.
All right, my friend. Well, hey, thank you so much. Appreciate it. Have a great time. Oh, by the way, when's your website gonna be up? Someone keeps asking here. When's your website gonna be up?
I mean, yeah, that's what I asked the web guy. So
always tomorrow.
It's always and it's always more. So just being a web guy myself and have set up like maybe 100 websites in my day, it always takes longer and it always costs more than you really want it to. Soon is all I can say. But in the meantime, I'm going to be giving away pretty much all the content for free. So in the meantime, I'll give it away for free and hopefully people can take advantage of it and hopefully make money. That would be great.
There you go. Love it. All right, my friend. Well, thank you very much. Appreciate it. And we'll talk to you soon.
All right. Thanks, Merlin. I appreciate it, man.
Because that was Colin Tedards of the Investor Channel. He's got some of the best content you're going to find out there from a fundamental perspective. Like I say, it's always nice finding people to do the job that you don't want to do. I don't want to look at fundamentals. And if you watch the video we put out today on Jamie Dimon and JP Morgan, friggin' awesome. I mean, it is such in-depth calculations. I could see there's a little bias because he's long JP Morgan, but as you look at the numbers, there's a reason he's biased. The numbers look so unbelievably good. He also look at companies and give you a negative perspective too if the numbers don't look that great. So check him out. For those of you particularly that are in the fundamental side, you're going to absolutely love it there. He's got a newsletter, which I put the newsletter in the chat as well. And for those of you who are new to this program, I do appreciate you joining us as well. Click that subscribe button. I do this show live every day at 2 p.m. Well, unless I have something else going on, but typically 2 p.m. to 3 p.m. every day, Monday through Friday. And it is all viewer driven. So if you've got topics, things you want to discuss, you can always send them in to tradermerlin@gmail.com or put your comments down below any of the videos, and I'll get back to those. Like yesterday, I don't usually like to do hour shows, but we have maybe a couple minutes here where I will go through these. We talked about crude oil and that great breakout that we had back here on December 30th, and it has been screaming ever since then. We've actually just ripped through two major supply zones. At this point now, you're looking at potentially 82 as your next target, and it's already $80. So pretty fantastic. Merlin, you have a class in an hour. I know, Lisa. I know I have. I missed my XLT general session this morning. I started 15 minutes late this morning. Damn it. Bitcoin back above 100 grand. This is very good news, right? Again, we're just watching this thing kind of traverse sideways. If it gets down below that 88 level, 87 level, as you pointed out, not very good. Well, today, looking fairly decent. What you really want to see here for anyone who's very bullish on Bitcoin, as I am for the long haul, is we've got to get above these highs we saw back in the first week of January. Got to get above 103.8. Let's say we get to 104. We get to 104, we're challenging 108. Then I think we're off to all-time highs. And I think that's going to happen next week as Trump takes office. I really do think you're going to hear a lot more talk about a strategic Bitcoin reserve for the U.S. economy. That would be pretty amazing from a Bitcoin perspective, especially if they do agree on buying 1 million Bitcoin over a specific window of time. That could be absolutely huge. NASDAQ, phenomenal day for tech, although remember we talked about this channel kind of going down. It's still overall slightly bearish for the past month, but today was fantastic. I loved it. I got a bunch of options expiring Friday, and this just helped me move further away from my strike price, which is great. Let them expire worthless. Looking great, but keep your eye on that downtrend line that we have here on the NASDAQ. Same thing for that Russell. Retracement up into this kind of overhead supply that it's bounced into a couple of times. We'll see if that holds for tomorrow's session, 1.97% gain. Your S&P was up 1.8%, but it also lower highs and lower lows. So there is a shorter term downtrend here that has not broken yet. Commodities like gold did well, but still traversing sideways. Nothing that exciting from that perspective. And then finally some weakness going on in the Dixie. The dollar index sold off a little bit here today, down 0.1%. And we saw the 10-year bond drop in yield by 2.9%, resting at 4.65 overall. All right, I'm going to wrap that up here. Again, tomorrow we've got John Rowland on the program. I'm excited. We'll talk about commodities, we'll talk about oil, natural gas, broad market. He is a wealth of information with many years on the NYMEX, New York Mercantile Exchange, etc. So if you have something you would like me to discuss with John Rowland tomorrow, you can email me again, tradermerlin@gmail.com, or put your comment down below any of the YouTube videos. That said, thank you guys so much for your participation, and welcome all you new folks. We'll see you tomorrow. Take care, everyone.